Good Friday afternoon, everybody. I'm Peter Grant from Zaner Metals in the Denver office. With me is my colleague Pete Thomas from Chicago.
Welcome to the Financial District of Chicago, and it's always good to see you, Pete. How's everything going?
I'll tell you, this has been one heck of a day and one heck of a week.
Phew.
We've got the gold market down almost 4%. We've experienced $85 range today and a $126 range for the week. That's pretty exciting stuff. What do you think's going on, my friend?
Well, I'll tell you, I mean, they call us Dramamine trading now. It's no longer Zaner Metals. It's been, if you didn't get seasick over the last few days, you weren't trading. It's been just radical, and what we're seeing, I believe, is the exponent of very large positions accumulated over a number of days. For example, as was pointed out, we've been seeing money going into the gold ETFs for over 3 weeks, 21 days of continuous buying. And the next thing you know, they kick the legs out from under this for $120, Pete?
Yeah, $126 from the
Wow.
7-year high that was
Yeah.
set just on Monday,
I'm
which now seems forever ago, doesn't it?
it does. I mean, it really does. So, um, I would say offhand that one of the more radical trading scenarios that I think we've ever seen, and the thing is that it goes to exactly what I think it is margin calls, liquidation. When you liquidate to pay a margin call, for example, from trading places and Eddie Murphy, and you see the margin clerk come in to Duke and go margin call, gentlemen. That was today. And what happened was they were selling their gold, silver, platinum, palladium, anything that had a bid was hit today. And today was, I think, probably pretty close to a bottom.
Yeah. So I agree with you. I think this is sort of classic deleveraging, as the stock market got shellacked all week long. And people hearken back and say, we haven't seen volatility like this in the stock market on the downside since 2008. And if
Yes.
you remember, in 2008, gold dropped 33%, sort of in the as the financial crisis really got rolling. So
Yep.
the subprime crisis sort of morphed into a full-on banking crisis that ultimately culminated with the collapse of Lehman Brothers, and then all the
Right.
government programs to bail everybody out.
Sure.
But in that interim period, stocks got hammered hard,
Yep.
and gold, who you would think, the kind of the logic goes that you buy a safe haven in that environment, but the same thing was going on. People were selling their metals
Yep.
to basically cover margin calls and raise cash. And so I am having 2008 flashbacks. And I think this is a very similar type situation. The other thing I wanted to point out, and I know we've talked about this before, but every uh, commodity fund and commodity ETF has gold component, silver component, platinum, palladium. And so as the commodities get hit harder on this ongoing theme of global growth risks, uh, people are pitching their commodity positions, in some instances going short, but in those instances, they're also selling metals, including the safe haven metals like gold.
Yeah, like you're saying. I mean, what we're seeing is very similar to 2008, where you're seeing just massive liquidation, and all of it is for a drive to cash. People want to have equity, and in a lot of cases, especially like in 2008, people were liquidating to pay bills at one point. It
Right.
was a very desperate situation, and we that's what we saw, and that's
Yeah.
what we're gonna. And I didn't see it slow up a bit in the metals today.
Yeah, I agree, and we haven't gotten to the stage yet where these demand risks have resulted in job losses, at least on a large scale. But I suppose we can't really rule that out at this point. But there is more talk of the possibility of recession, both globally and in the United States, and then also what the central bank and government fiscal responses are likely to be. But there is a growing expectation of Fed rate cuts
Oh
coming
yeah,
up,
that
which
I don't.
should actually be a little bit supportive to gold, I think.
I think you're 100% correct there. I see no choice on that. I saw some scuttlebutt, if you would, coming around about the Fed apps with contemplating in a closed door meeting today about possibly going negative. They got together to discuss it in order to see how far out they could throw the anchor, if you will.
Yeah,
There's no backup to that, nothing published on that, but it was some scuttlebutt and it came from some pretty reliable people. It's certainly, let's put it this way, Pete, it goes to what you just said. It's in the mix.
yeah, yeah.
Yeah.
So this kind of volatility in the metals market sort of speaks to what we do here at Zaner Metals. And as a co-creator of the Tornado Trading Platform, why don't you take a minute or so to tell us about what the platform allows you to do?
Oh, absolutely. Many years ago, Tom and I were selling up metal, delivering metal, dealing in bullion, dealing in futures as well, making delivery, and we were in a situation where we had a great deal of risk in our company, and we had nowhere to lay it off. So we sat down and designed a platform that allows individuals who are in our same situation, miners, scrappers, e-waste, bullion refiners, coin stampers, in order to lay off the risk that we were also enduring, and it allows you to mitigate that risk by going down to the ounce versus having to do a 100 ounce or a 5,000 ounce contract. You could sell exactly the amount of risk that your house is under, and it's worked out for a decade and a half, and everybody likes it. They enjoy the fact that we have lower margins because we represent hedgers. Nobody's taking punts here, and that also has afforded us a great deal of stability.
Right, absolutely. So our clients with physical metal in the vault in their possession are typically short the market
They are.
to protect those positions. So the natural position of a hedger in our circumstance, anyways, is to be short the market, and so they're making money on the hedge side while they're losing money on their inventory. So there's that offset, and that's what hedging is all about. So
Sure it is.
thank you for that.
And
Um,
and by the way, that's also recognized by the exchange. We file our traders as hedgers, and because of that, they get a lower margin, which is very advantageous to a cash-driven business.
Yeah, absolutely.
Hmm.
Absolutely. So let's continue with the volatility theme. So
Yeah. Oh,
silver
yeah.
was down 6.6% today. Platinum down 7.75%. Palladium, the market that just wouldn't give it up seems to have
Yeah.
finally, at least temporarily, given it up. It was down about 10.5% today. So volatility across the board. You sort of almost expect it from these more industrial metals like silver and platinum. Um, you would have expected it from palladium too, but that's been sort of a unique market, I think.
Right.
So definitely in a corrective phase here, and I would have felt good about. In recent weeks we talked about the possible blow off top in
Yes.
palladium, but the darn thing went back and made a new all-time high this week
Yeah.
before it collapsed.
Before it collapsed. Yeah. Just had
So
to just
so yeah,
that was scary, actually.
yeah,
So and something else you left out, all the industrial metals, copper, lead, tin, aluminum, all the things that are used in manufacturing of cars, durable goods, things like that, all got hammered again today. So it wasn't just the precious metals; it was all the metals got hit today.
right, right.
Yep.
And again, I think there's fundamental reasons for that.
Oh yeah.
As the coronavirus crisis continues to widen and spread, it's not surprising. Our email newsletter this morning made a really good point with regards to demand in gold. Most of the physical metal transactions in China and India are conducted face to face, and that's just not happening
No,
anymore.
and
And
I
and
I
the
think. I think that's probably one of the most valid points that you and I have seen in a while. I read
Yeah.
that today too, and it made so much sense. And go ahead and reiterate that, because it is a very clear picture.
Yeah. So again, China and India, the it's a lot of jewelry for one thing, typically, and it's deals that are conducted face to face, and because of the coronavirus concern, people are disinclined to be face to face,
Right.
understandably. Those two countries, India and China, are the two largest consumers. China is also the largest producer of gold in the world, but they account for about 1,000 tons of demand a year between the two of them. So it's a significant hit on demand,
Yeah.
which I think is is again part of the reason. It's sort of almost the perfect storm.
Yeah, thank you for covering that. I think our viewers will now have a better picture of the tremendous drag that's hitting the gold market.
Yeah, and on our YouTube channel, I'll put the link to subscribe to that newsletter because
It's a
it's
good
been
one.
really,
Yeah.
really spot on
Yep.
recently. So
Yep.
I think I'm exhausted. It's late in the day. We're shooting this like 4 hours later
I
because we've been
believe me.
dealing with
Uh, we've got the mop
inundation
and
of
buckets out
trades.
over here, pal. Let me tell you, it's just
Yeah,
and there's spots all over the wall. If you know what I'm saying,
right,
it's
right.
been messy,
It's been
and
a heck of a week.
yeah. So let's just call it a day, and thank everyone for dropping in for our weekly wrap up. I wish we could go more in depth, but I think everybody knows what's going on. And Pete, if you could give them our spots on Twitter
Yep.
and that will allow people to get their daily updates, so they have a little more information during the week.
Right, right. Always on the end screen. And
Perfect.
again, please subscribe to our channel and give us a like. And with that, everybody in the metals business deserves a relaxing weekend. So go out and make that happen.
Of course, there'll be some libations involved in that, and gentlemen, enjoy.
I'm Peter Grant from Zaner Metals Denver office.
And this is Pete Thomas in Chicago. Thanks again.
Have a great weekend.